I came across a theory recently that, honestly, it completely stopped me in my tracks. It comes from a veteran analyst, Lynette Zang, and it's all about a piece of legislation that most of us have probably never even heard of. But according to her, this isn't just some random, obscure law. No, it's the switch that's already been flipped on the US dollar as we know it.
I mean, just think about that for a second. What if a massive, fundamental reset of our entire financial world has already happened right under our very noses? Zhang's whole position is that this is exactly what's gone down, and the proof has been hiding in plain sight this whole time.
And there it is. That's the bombshell claim from Zhang that we are going to unpack today. She's not talking about something that might happen in the future. In her view, it's a done deal. So you've got to ask why, right? Why would a whole new system be needed in the first place? Okay, for a claim that big, you need some serious context. And to really get Zhang's why, we have to look at the cracks she sees forming in the very foundation of our current system. For her, the official economic story we're all being told, well, it just doesn't add up with what's happening in the real world. So here's the disconnect that Zhang is pointing to. Officially, they tell us inflation is low, a manageable 2.7%. But she argues that your grocery bill, your gas bill, it's telling a completely different story, something closer to 10 or even 20%. Her main argument is that the data we're given is so flawed that we are, in her exact words, flying absolutely blind. And if you can't trust the numbers, how can you possibly trust the stability of the system? And this number, this is what Zhang sees as the huge flashing red light. The US Treasury market is supposed to be the bedrock of the entire global financial system. But the traditional buyers, countries like China and Japan, they are quietly backing away. Zhang points out that they've dumped over $300 billion worth of US debt in just the last year. That's a huge deal. So that leads to the multi-trillion-dollar question, doesn't it? If the rest of the world isn't buying America's debt anymore, who is? Someone has to fund all that spending. And according to Zhang, the answer to that massive problem is the entire reason for this so-called Genius Act. And this is where it all comes together. The so-called Genius Act enters the scene. Now, Zhang argues this legislation has nothing to do with fostering cool new tech or innovation. She sees it as a clever plan to create a brand new, artificial, and this is the key word, captive market for all of that US debt. So, the law that Zhang nicknames the Genius Act is actually a real bill, something like the Clarity for Payment Stablecoins Act. On the surface, it's all about regulating stablecoins, those cryptocurrencies that are pegged to the dollar. But Zhang's analysis is that this is just a smokescreen. She sees it as a backdoor way to force money into US treasuries by making them the legally required backing for this whole new digital money ecosystem. And Zhang's theory on how this works is, well, it's pretty wild. Picture this. Huge corporations, think Amazon or Walmart, start issuing their own stablecoins. You use your dollars to buy these Amazon coins to shop on their site. But here's the trick. The law would force Amazon to take all those dollars you just gave them and go buy US treasuries as backing. All of a sudden, every single shopper becomes an indirect buyer of government debt, whether they know it or not. In her view, this basically nationalizes the debt onto the public, making us the buyer of last resort. And the potential scale of this new market is just staggering. It's already at $125 billion, which is a lot. But some projections show it exploding to $2 trillion within just a few years. From Zhang's perspective, that's not just some random market growth. That's the deliberate creation of a massive new pool of money that is legally forced to soak up US debt. But, and this is a huge but, this genius solution comes with what Zhang sees as a catastrophic side effect. She predicts this whole new system is going to set off an unstoppable chain reaction that ends in only one place: hyperinflation. Okay, so let's walk through her logic here step by step. First, you and me and everybody else, we take our money out of our regular bank accounts to buy these new corporate stablecoins. Step 2, this pulls an enormous amount of money out of the traditional banking system. Banks have less to lend, creating a huge credit crunch, a deflationary shock. Step 3, the Federal Reserve really only has one tool to fight that kind of deflation, and that's to print astronomical amounts of new money. And step 4, that massive, desperate flood of new cash is, in Zhang's view, the textbook definition of what kicks off hyperinflation. The cure becomes the poison. So, Just to be crystal clear, in Zhang's framework, this isn't some minor policy tweak we're talking about. She sees this as a historical earthquake. It's the third great monetary reset of our modern era. First, you had the creation of the Fed in 1914. Second, going off the gold standard in 1971. And now, this, a total shift to a digital corporate-run system built on debt. So, given this really stark prediction, what does Zhang propose people actually do? I mean, what's the move? Her answer isn't about finding the next hot stock or anything like that. It's about getting back to the first principles of what money and wealth actually are. Her whole strategy is built on this fundamental difference between two kinds of money. On one side, you've got fiat money, like the dollar. It's based on debt and, really, a government promise. On the other side is what she calls sound money, physical gold and silver. These are tangible assets. They have a finite supply and real-world uses, which she argues is why they hold their purchasing power over time, no matter what promises the government makes or breaks. And all of this leads to her personal mantra for resilience, and it's all about tangible, real-world necessities. You've got food, water, energy, and shelter as the base. Gold and silver, in her model, they provide a way to barter and preserve wealth outside the official system. But what's really telling is that she also stresses security and community, arguing that when a real crisis hits, it's your local network, your neighbors. They become your most valuable assets. And that leaves us with this final big question to chew on. As we race into this increasingly digital and, abstract financial world, Zhang's analysis really forces us to ask a fundamental question. Is the value of our money derived from a government promise and a line of computer code? Or does it come from something real, something tangible you can actually hold in your hand?